Joining us now to wrap up what's really been a fairly eventful and tiring week for most of the market, Isa Ogoshi, Asia Pacific Equities PM at JP Morgan Asset Management. Joining us, in fact, they're out of Tokyo. Isa, good morning. Are you ready for the weekend? How's your week been?
Very much, yes, thank you.
Okay. How did you guys handle the moves this week? Did you sell into that rally, sell into that drop on Monday, or did you pick up something nice for yourselves?
Well, to be honest with you, there's been very little movement for our portfolios. I think what we need to see first is for the volatility to settle, and then we've had plenty of time to reassess, and then we can get some trades on next week, hopefully, when the markets are a little bit more calm.
Yeah, what signs are you looking at to make sure that we see some calm and maybe this market approach a bottom?
It's very difficult to, assess the exact timing, but this has been coinciding with the earnings reporting in Asia, also in the US. We have a lot of data to process, and again, I think just going back to basics, which companies are doing better than expected, which companies are not delivering. These are the data or the trends that we really focus on, not necessarily just the market volatility.
Okay, well, it's a timely comment that you're making there, because we are in the thick of earnings season in Japan, and the way the market is reacting and punishing, subpar earnings is substantial. Shiseido, and you have a few more today down double digits. Isa, what do you make of the current earnings season there in Tokyo so far?
So far, obviously, the stock price moves have been exaggerated along with the market volatility. But in terms of the earnings themselves, I think there's been very little surprise from our perspective. So, for example, the China consumer exposed names obviously are still showing weak trends. The tech names, there has been some divergence, but in general, many of the tech names, as we expected, are doing well still. So in terms of earnings, again, we tend to think the market volatility is telling us something, but if you look at the actual numbers, they have not been, they've been, as expected.
Given this whipsaw, I'm just wondering, does it change the psyche at all? In any way? What does it mean for stock selection? Do you think trends have actually changed? Or as you mentioned, tech is still doing okay. Can you still stick to those winners?
Yes, obviously, positioning had been extreme, especially in the tech sector globally. And I think that has some adjustment to come. I think another point is that, it has been an AI, NVIDIA-centric tech rally. I think that may diversify into other subsectors going forward. And again, the key is to keep an eye on the earnings trends. Yes, and then, it's easy to panic in these times, but really just sit down and look at the numbers and then reassess our positioning. This is what we tend to do.
Yeah, well, I said the calm in your voice is certainly, the anchor we need in a storm like
Soothing.
this. Yeah,
yes.
let me say that first. So I'm looking at your top holdings, and not to get into specific names, but certainly you look at the names you have. The TSMCs, you have SK Hynix. A lot of it is still leaning towards AI, and you mentioned we might see a rotation out of that theme. Do you guys anticipate reducing your exposure to the AI theme?
I would say not reducing overall, but just becoming more selective. Maybe just improving our quality exposure within those sectors is one. And I think outside of tech, there are many areas that are still doing very well. So, the Japan corporate governance and shareholder return theme is still ongoing very strongly. In Korea, we have a similar theme as well. So it's not just about tech. And I think, again, it's really important to observe the actual trends and observe the actual earnings and then decide upon that.
It seems like what's really dominated the narrative of late is what central banks have been doing, especially when it comes to the BOJ. Do you think that the BOJ can still hike rates this year, or do you think they're a bit gun shy, just given some of the comments that we heard from Uchida this week as well? And do you expect the yen to strengthen from here?
Yes, well, central bank policies is very difficult to predict. What I can say, or what we would like to remind ourselves, is that the monetary policy normalization is positive for Japan overall, and we did want to see the yen stop weakening, and that's a very big positive again for the domestic Japan economy. So, very difficult to call the timing of the next rate rise, but I would emphasize that it is not a negative, unlike in the other developed economies. Raising rates for Japan is a positive, and this is an ongoing normalization process.
Right, and Isa, to your point, I think the issue is not so much that the BOJ is normalizing policy, but how they're communicating their objectives. I mean, do you think they messed things up this week as far as messaging goes?
I think timing was very unfortunate. So if you look back, they raised rates on Wednesday. Wednesday, Thursday, the markets were not as volatile, but then came the news out of the U.S. Along with some earnings disappointments. But of course, I hope they will be a little bit more careful. But underlying data from Japan, I know that domestic macro, GDP numbers have not been great. But if you look at the more micro aspect of, for example, wage hikes, we see labor shortage everywhere ongoing. And so we believe that the wage hike trend will continue. So all of those things together, we don't necessarily feel that raising rates further is not out of the question.
So out of your Asia equities portfolio, I mean, how are you looking? I know we've talked about it sector by sector, but in terms of best markets, are there ones that you're looking at that are likely going to outperform this year, and what are they?
Yes, that's a difficult question. Going back to, we always want to go back to valuations, and China undoubtedly has been the cheapest market within Asia. This is where we have been focusing on stock selection over the past couple of years. Policy tailwinds are starting to appear as well. So we feel that China can actually be outperforming when the other markets have been so volatile. We also know that China is probably underowned globally, so that also adds to some attraction there. And I still feel that Japan has a lot going for the market. And once the volatility in currency and markets settle, we feel that Japan is still very attractive.
Isa, thank you so much. Isa Ogoshi there, Asia Pacific Equities Portfolio Manager at JP Morgan Asset Management. You deserve a break this weekend, as of all of us. Still ahead on the China Show, Kwei Chun Mao Tai.